Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, November 9th, 5:32 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in a correction with a stalling short-term uptrend. You can see over here on the trend gauge, the surprising thing is that market leaders continue to hold up well. I took a look at every stock in my what is currently 57 stocks in my, that's 21 from the main 21 over 21 list, and the rest from my standby list. Only 3 of them broke below the 21-day exponential moving average today. Now, a lot of them pulled back, undercut the 21 and held the 21. Quite a few of them closed right on the 21. But this tells me it's probably inflection point time, and it just so happens that CPI is tomorrow morning. Typically what I see with this, when a bunch of them pull back to the 21, it's time to fish or cut bait from a bigger picture standpoint, and that means that the market's either going to have to rally and the leaders will hold the 21, or the market will break lower. They'll break the 21, further deteriorate, and we will go off of bullish from a leadership standpoint. The index is not doing anywhere near as well as leading stocks continue to be. Short term, we're showing neutral. That got a little bit worse today as the S&P 500 broke back below the 50 and the 21. And yesterday, the NASDAQ 100 reversed at the 21. Some damage done to the other indexes also. We'll look into that when we go through the charts. Medium day, 50-day moving average, green arrow moved a little bit further to the left with the break of the 50-day by the S&P 500, but it is just a one-day break. We usually need to see confirmation on these, but then again, confirmation on these moves, these 2-day confirmations have not held up, which is very typical bear market action. We're always keeping an eye on a change in the market. They don't ring a bell and say, okay, the correction's over, everybody back into the pool. What they do is and this is why bear markets wear out bears and bulls. They'll try to go higher. You'll get a little bit of confidence, lean on the long side, and then you'll end up with a day like today where everything for the most part goes lower. And we, as always, cut our losses. A couple more paper cuts today. I know these paper cuts are getting tired. I'm tired of them. It's part of the process, and we know when this bottoms from historical models that we'll be looking at 20, 30, 40, 50 stocks that'll double in the period of a couple of months to a year. And we'll be ready for those. They'll take care of all of these small losses. We'll still be compounding our base of assets from twice as high as where it would be, because we've lost half as much as the S&P 500 did. And this is just a painful part of the process, but it certainly is part of the process. And we'll either go significantly lower. When we get stopped, we usually end up going significantly lower, or we hold that support. And stopped on a few more things today. We'll go through all those trades as we always do, because we're fully transparent here at Revere, and we'll set things up for tomorrow. Long term, still on red. The Dow Jones Industrial Average pullback closed right on its 200-day moving average today. So again, another inflection point set up tomorrow with CPI. So what happened today? We had more of the same hangover from this FTX crypto liquidity crisis. In fact, Binance, who was supposed to bail them out, said they opened the books, took a look at it, and it stunk so bad that they pulled out of bailing them out. So now the question is, were they using customer funds? Probably, because that's why Binance would have turned away from it. I'm not making accusations. I'm saying that that's kind of what happened with the bail. I can't remember that company, that John Corzine company, when I have no idea how client funds got intermingled with company funds. Sure, John. But anyway, So we had that, and then also I was watching the news before the election returns started coming in last night, and Maria Bartiromo was on, and she said, if we see a big Republican red wave, expect the indices to take off to the upside tomorrow. And I was like, well, yeah, that's what you would think, and that didn't transpire. First of all, there was no guarantee that that's what was going to happen. It's possible that this last couple day bounce was in anticipation of that happening, and this sell-off today was the disappointment of that not happening. We as humans like to have a reason for why things do what they do, but in the markets, you just have to set the narrative aside and just obey price. And this price was not good today. So G6, growth stocks continue to get mad. Today was really a bad day for growth stocks relative to what else was going on with the rest of stocks down 3.6%. S&P 500 gap down 0.65%. A little bit of sideways action for the first hour, and then the frozen slope lower. Never a good sign, down 2.1%. NASDAQ 100 down 2.3, Dow down 2%, mid caps down 2.1, Russell 2000 small caps down 2.7, Global Diversified 60/40 down 1%. GROTECTION in-house were down 0.94%, less than the indexes, but again, cold comfort. I hate losing money. And stops got set, but we do have some exposure for CPI tomorrow. We'll discuss that when we get to the tail of the tape. So let's move on with the charts. But first, we'll talk about our 2-minute warning here at Revere. Why we do what we do, how we figured it out. So we're a fee-based only, transparent, conflict-free, fiduciary, SEC-registered investment advisor. Our flagship portfolio is called GROTECTION. It's designed to grow your assets in uptrends, protect them during downtrends. We manage individual client accounts using various trend-following rules based on 3 time frames and the action of leading stocks, as I referenced on the trend gauge at the beginning of the video. In an ideal uptrending market such as last October, we'll be fully invested in the market. If things start to roll over, slow down, go more neutral, if we consolidate, we'll reduce our overall exposure. We start to downtrend, you'll see the slopes of the lines roll over. And in a worst case scenario, we'll break the 200-day moving average. That's the black line on here. And that is where risk significantly picks up, because all of these bear markets occur underneath the 200-day moving average. From the top to a break of the 200 is on average is about 12% down, and the average of bear markets is 33% down. So an additional 21% points down from where you break to where we bottom on average. And if it's a severe bear market, you're down at 44.5%. And you need 80% to get back to even. If you're approaching retirement, that's a dream crusher. That's why at Revere, risk management is our number one priority. If you minimize the drawdowns, the gains will take care of themselves when a more favorable market returns. And as I said, we'll be compounding from a higher capital base with various re-entry rules, such as a failed breakdown, which is what we saw here, or a move above the 21-day exponential moving average, which we saw here. Unfortunately, pullbacks after that 21 have chopped us up a little bit, but long term, we know that the system is profitable, and we're just waiting for that improvement in the market. It could come tomorrow, it could come in a month, it could come in a year. We don't know for sure. We do know that we'll be focusing on protecting assets in downtrends and growing them when the market is healthy. And if you're interested in this approach, give me a shout. Email don@revereasset.com. Phone is 855-REAL-WEALTH. That's 855-732-5932. So let's go to a 5-minute chart of the S&P 500. You can see the gap down, a little bit of a rally up into 38.18, reversal, bounce, and here's the frozen slope into the close. Right around here was the time when that announcement came out that Binance was backing off of the bailout of the FTX crypto exchange. and just selling into the close near the lows, never a good sign. Let's go to the daily chart. You can see the damage done. That broke below the 50-day and the 21-day moving average, and several of our holdings got stopped out. We took a profit on our short on the NASDAQ 100, which offset some of those losses, and we'll talk about that also when we go through. You can see here the failure of the 21 yesterday was where we took the short using QID, and cashed that out today when we booked a loss in our IWM, which we also took yesterday. Let's go to the Dow. Here's the DIA. You can see closing right on the ADMA and the 200-day, which are intersecting. MDY mid-caps sitting right on the 21. The 21 is above the 50 on mid-caps. IWM 21 above the 50 also, but we broke both, and this is where we basically, the gain on the QID offset the loss on the TNA for IWM, which we had here. A negative is that the stochastics on all 5 of these did their hook down after trying to cross up, so those deteriorated also today. Let's look at a key 6 other indexes that we need to look at, or asset classes. So you see gold hitting this 160 level in reverse. It hit 161 a month ago. 160 was a battleground 2 months ago. 3 months ago, 160 was a battleground. So normal spot for it to stop, but do notice the slope of the 21-day exponential moving average has rolled up. It is above the 50-day moving average. It's been a couple days above the 50 back here in August, but firmly above the 50 now. We're keeping an eye on this, although it is at resistance. And why would gold be down today? Of course, because the dollar, after 3 down days, reversed to the upside. Is just this is a bounce into the 50 and the 21-day moving average. We'll see what happens tomorrow, but for now we bounced at the bottom of this range. It's only about a 4% range, but we still have this abandoned candle up here from 11.3, 3 down days, and now a move off the bottom from the bottom of the range. Let's take a look at the VIX. And you can see the VIX here up for the second straight day above the 8 EMA, which it hadn't been for 2 weeks, coming into the declining 200-day moving average, still below the 21, still below the 50, closing right at that 26 area, the top of that 24 to 26 neutral range. Next up is TNX. It was up on the day, so bond prices, actually TNX here. Yes, TNX up slightly on the day, 0.61%. The 30-year TYX also up 1.46%. So yields up, certainly not helping the market. Now, let's take a look at something that got blown apart today, and that's Bitcoin on that crypto crash follow-up from yesterday, down another 13% today. So you remember we talked for a while about this 12.5 to 13 consolidation range. Failed breakout. From failed moves come fast moves in the opposite direction, although I don't think anybody was expecting something like this. This is kind of a black swan from the crypto world. Really harsh move. And in fact, you can see it on the daily chart. Crypto was trading so tightly for months that we switched to the 60-minute chart to be able to see the ranges. But you can see breaking to some serious lows below this 10 area. I think it's got a 16 handle. If you look at what Bitcoin is actually trading at, and all these other crap coins are down 10, 20, 30, 40% over the last 2 days during this. I've called it a game of musical chairs for a while. I just couldn't trust it between the hacks and the coins with a single use case. I mean, who has really used any massive utility coming out of Bitcoin or coming out of crypto other than making some payments? here and there and accepting it. It's just, I don't know. I think it's garbage personally. And the fact that most of those coins go to zero and are just have fraud built into them to take advantage of people that don't do their proper due diligence, and they've even fooled a bunch of people that have done a lot of their due diligence and put billions of dollars into it, like that Novogratz guy who got a Luna tattoo only to see Luna blow up. So anyway, those are the major charts that back up the indexes. Let's take a look at the tail of the tape here. This bull case again is hanging by a thread again. Put calls at 1.01. VIX at 26, only up 2%. VIX only up 2% on a day when the market is down 2% is again an anomaly, but the VIX has been acting strange. Fear and greed down 5, back into neutral. I mentioned no election red wave. Binance backs out of FTX bailout. CPI Thursday morning day count goes from up 3 to down 1. That's a perfectly normal day count, by the way. 3 up days, 1 down day. See if it's just a pause, but CPI is really going to have a big say in that tomorrow. Expectations positive as long as we're above 3,800. Well, we're not above 3,800 anymore. Although, we did bounce several times. This is just looking like a normal consolidation today. Here's an undercut right at the open of 38, reclaimed it. Another undercut with a lower low, reclaimed it, broke out. So this is looking like a double bottom breakout, but that failed. Broke below 3,800 again. Hey, we've got another run into us, but now we're making lower highs. And then after 11:50 today, just the trend down with the Binance news, Binance FTX news. So frozen slope down for the rest of the day. Afternoon, what was up today? The Biden sectors, solar and marijuana, up today along with the dollar. 11 out of 11 of the spider sectors were down, and oils in particular got hit after being the leading index. Coal was down big. Bitcoin, as I mentioned, down. XME down. We'll go through our focus list here when we go through charts, but what we did in-house, sell ANET, we got stopped on it. A gap down with the announcement from Facebook, Meta, whatever, that they're going to be cutting expenses. ANET is a big provider of their network and their data centers. So that gap down, our stop got hit on that. We got stopped on LNG, which broke the 50-day moving average. TNA and QID, we sold both of these, one for profit, one for a loss, and we trimmed half of the SPXL going into tomorrow on the break of the 50-day and the 21-day moving average. Bottom line, post-election weakness before CPI, FTX, crypto weighs, all things that I've mentioned. We're here at 37.49. Actually, I need to move this because we're below the 50-day, the 21-day. So we're down around here, this 3,700 to 3,730. Today's low 3,744. This is a big support area. That's been the support area. If you go to a 60-minute chart on the S&P here, this 37 to 3730, that's where we held last week on the sell-off after Powell went all hawkish on everybody, and then a gap down the next day, but that's where it held. We rallied, we back tested again, it held 37.08, but very clearly 3,700 is a big level here, and you can kind of see us battling back and forth with 3,700 on the left side of this chart. So on the downside, that's where we're focused tomorrow. That has to hold. It's possible we bounce there. It's possible we gap up. It's possible we gap below it. We'll be ready for all circumstances pre-market. In a couple clicks of the mouse, we'll get rid of the remaining risk that we have, which is at 0.28 or 28% of the risk of the S&P 500. And most of that is in the 5% of SPXL that we have left. And I'll go through the trades when we go through the focus list, and let's do that right now. So focus coming in. PI, we sold a third of this yesterday or 2 days ago when it broke below the low. Closed mid-range today, still holding the 21. We've got a small loss on this, but it is still holding the 21. double support here at this 100 area, 99 to 100 being the pivot before the earnings gap up. I would like to see the volume tame a little bit during this pullback, but it hasn't been. Stochastic is rolled over, so it's almost like we've got a foot out the door on this one. STNG, this was strong early in the day, but all of the oil stocks took a hit today. This one undercut and reclaimed the ADMA and then hung right around that ADMA for most of the afternoon, so we're still holding 2% position on that. Unlike LNG, which we got stopped out on the break below the 50-day moving average with volume. First Solar, which we bought yesterday, had a nice update today as solar stocks, as I said, were strong, and it's holding the 8 EMA, so we're still holding that. But we did get stopped on ANET, and all these stops were for about a tenth of a percent or less. So yeah, they're paper cuts, they're small. They are adding up, I'm aware of that. But as I said, I know how these trends you just compound gains when things turn right. But the gap down below the ADMA and the inability to get back above it, and the fact that the volume was above average on it, we cut this one, although it's still above the 21. So, and then I mentioned with IWN, we got out of that, our TNA, and we booked the profit on QID, which was our Q. Those kind of offset each other. So other stocks that we were focused on and why we're focused on them. GFS, follow up from yesterday's big gap up. This had an inside day and closed at the top of the range and above this 60 level. I'm going to give this an A for its behavior today based on what was going on in the overall market. And you know how I feel about big earnings gaps up. Some of them are working, some of them are going sideways, a few of them are breaking down, but overall, I think they're outperforming the market. I went through the 30 plus charts of gaps that I have after hours yesterday, and I didn't see many red flags. Second one was Wing. This one acting fine as it's consolidating here above its earnings breakout. One undercut today. Light volume pullback today. This is still looking fine. BA continues to act well, consolidating near the top of C. Now it's coming to the top of the cup. This would be a perfect time for it to put in a little bit of a consolidation here before breaking out, maybe come back and let the shorter term moving averages catch up to it, but you can't ignore that volume on the move up. And then gaps today, 4 of them. And they all look good. Array, a solar stock, closed in a little bit below midpoint of its range. Volume big, fundamentals great. Only about 100% above average volume. Well, no, not 100%. Well, that's weird because that says volume up here plus 272 with 96% when you right click it. So that's got to get reconciled. Also, Axon, this is the former Taser, body cameras, big business, gap up to recent highs. Let's look at it on a weekly report. It's not all-time highs, but made highs last year or in late 2021, big base, then this stage 1, which it's blasted out of now. With pretty good volume. That says plus 259 and it says plus 259 there, so that matches. I'm not sure why the other one was off. SFM, Sprouts, gap up on earnings. Top of this makes it a cup and handle breakout. Ugly cup and handle has 2 earnings reports ago. There was a big gap down on this. Last earnings a gap up, second earnings in a row where it's gapped up. Relative strength at a new high, has been trending higher, albeit in a choppy manner. Fundamentals aren't great, but it is fairly new, a fairly new stock. And Halo, HALO, biotech stock putting in nice move up here. When the biotechs pulled back, 5-day pullback, the smaller biotechs pulled back, the bigger biotechs have been showing more strength. Gap up and break out of the cup and handle here, 140% above average volume, up 8% today. Nice earnings growth, 95% next year with a PE of 21, so it certainly is not overpriced. You can see the fundamentals here. They make money, and an 80% earnings growth is the best of the 4 quarters shown there. So Halozyme looking pretty good. Let's compare and contrast those two biotech ETFs that I'm talking about. Here's the smaller cap, broader based XBI, which was down 3.3% today. IBB, the larger cap biotech, just down 8% today. In fact, an inside day versus yesterday. We took our profits on this yesterday. I would be very happy to get a re-entry on this lower at a good low risk entry point. But for now, we don't own the biotech anymore. So what we're left with is 2% First Solar, 2% PI, 2% STNG, and 5% SPXL. So we'll see what the reaction to CPI is tomorrow. We'll be ready, willing, and able to react to it. If you look at this IBB, that's a very nice cup that's forming on big cap biotech. Amgen, the big winner recently. Let's see what that did today. Nice tight inside day, down 1% at the top of the range after a big third day up. That looks pretty good. So that's going to wrap it. As always, like to hear from you, Don at revereasset.com. The phone is 855-REAL-WEALTH. Remember, folks, it's not how much you make, it's how much you keep. We'll be ready when the market makes its turn. We'll be playing it lightly in the meantime. Sometimes playing it lightly means you got to take a couple of losses, but that's part of the process. And it's a time-tested process. So we'll be with you every step of the way, and stick with us for our market analysis and what we're doing in our portfolios. Wrapping up Wednesday, 11/9. This is Don Vandenbord with Just the Facts. Thanks for listening and have a great day.